everyone, you're watching Weekly Forex Outlook by Light Forex. Before we start, I'd like to announce a New Year contest by Light Forex. The company congratulates you with the upcoming New Year, and I'm happy to announce that we have launched a contest with fabulous prizes for Forex traders. The participation in the contest is extremely simple. All you need to do is to deposit $500 on your account. Then you will get a unique number, and then there will be a drawing, and the winning numbers will be randomly found. The winners will get precious prizes by Light Forex. You can see that people have already started to register. The precious prizes include iPhone, iPad, Macbook, and monetary prizes. You can get the full terms and conditions of the contest at lightforex.com. And you should know that all participants have equal winning chances, so I encourage you to register, take part in the contest, and good luck to you. And now we can proceed with our analysis. And we have a look at the US dollar index chart in MetaTrader. During the last week, the general uptrend which existed this year for the US currency has slowed down. You can see that the US dollar index found a resistance. There is a bearish divergence on the weekly chart, and in the upcoming days the American currency can test lower levels. Last week the United States released a weaker than expected jobs report, also known as non-farm payrolls or NFP, and traders now expect earlier pauses in the Federal Reserve's rate tightening cycle. This is a negative factor for the USD. Also, it's necessary to point out that this week started with the worst sentiment of Forex traders. Now, the main topics which are discussed are slowing global growth concerns, as recently there were weaker than expected economic data from China, United States, and Japan, the world's key economies. In addition, market players are worried about trade tensions between the United States and China, and US Trade Representative has said that the countries should reach an agreement by March the 1st, or otherwise America will impose new tariffs on Chinese goods. As a result, the market's risk sentiment is negative, and risk-sensitive currencies like Australian dollar, New Zealand dollar, Canadian dollar are more or less suffering, while gold and currencies like Japanese yen are on the upside. Let's check the economic calendar to see which events await us in the upcoming days. And well, on Monday, later today, there will be UK industrial production, manufacturing production, and GDP figures. On Tuesday will be the release of British labour market data, average earnings index, and claimant count change. And America will release producer price index, an important indicator of inflation. And you can see that here the forecast is that the growth in PPI will slow down. This will be a negative development for the USD. Also on Tuesday, there will be a key Brexit vote, a vote on Brexit deal in the British Parliament, and the expectations, the forecasts are that the vote, the deal will be rejected by the Parliament. This has a big risk for the British pound. Next thing, Wednesday, and the key release of the day will be US CPI and core CPI. This is Consumer Price Index and indicator of inflation. Thursday will bring us the key event from the Euro area, the meeting of the European Central Bank and its interest rate decision. Comments during the central bank's press conference will, as usually, have a great impact on the euro. And finally, Friday, there will be industrial production figures from China. There will be manufacturing PMIs from the euro area, the most recent data about the euro area's economic health. And finally, there will be US retail sales figures also on Friday. These are the key releases of the week. You can see that the key events will be the Brexit vote on Tuesday, the European Central Bank's meeting on Thursday. Let's get back to MetaTrader and the chart of euro. We can see that as we expected, euro dollar was trading between 1.15 and 1.14 last week. The pair found support at a 200-week moving average just above 1.13 and is now trading on the upside. At the daily chart, we can see that the pair is currently above the 50-day moving average at 1.1411 and approached to the 38.2% Fibonacci level of the decline from September highs to November lows. So next Fibonacci level is located just above the psychologically important mark of 1.15. We can expect that in the upcoming days the euro dollar can get higher after it managed to break above this triangle here. And it can actually test levels around 1.15 this week. However, the meeting of the European Central Bank on Thursday will present a negative risk for the currency because, the European Central Bank will update forecasts on inflation and economic growth, and recently analysts are worrying of a potential recession in the euro area. The region has a lot of problems. There are concerns that inflation will decline. So as a result, we think that the event on Thursday will have negative risks for the euro, but ahead of the event, the currency may test higher levels. The support is located around 1.1410. The British pound, you can see, had support around 1.2660 last week. This was the minimum of August, so the previous minimum of this year. The British pound is now very close to this support level and it is waiting for some key Brexit announcements, and if British pound rejects the Brexit plan in a vote on Tuesday, and if there are no other proposals of dealing with the situation and the risks of a no-deal Brexit increase, then the currency pair may test support at 1.2660, and decline below that level will make the pair head down to 1.25 and 1.2415 mark. If somehow the Brexit plan is accepted, although this is not a big chance of that, then the GBPUSD will fly to 1.30 level. Here is the situation we see on the daily chart. The fact that the British pound has been trading in a narrow range between 1.2835 and 1.2660, and the days recent trading days have been really volatile. The US dollar is still trading in the overall uptrend versus the Japanese yen. However, you can see that last week the pair went down to the lower border of this trend and is now testing support at 100-day moving average and 23.6 Fibonacci level around 112.25. Decline below this level will open the way down to 111.50 and 110.75. You can see that bullish momentum has evaporated from this general uptrend, so the attempts of the USD to recover will meet resistance at 113.10. Here might be a level to sell the currency, or resistance will be close to 114 mark. The Australian dollar made a spectacular decline last week. Firstly, last week opened with a gap up, but the declining 100-day moving average prevented the Australian dollar from growth, and we saw this spectacular decline. The pair is having support around 0.72 and 0.7180. Decline below this level will send the Australian currency way down to 0.7090. Resistance is provided by 100-day moving average at 0.7232. Negative risk sentiment will hurt the Australian dollar, and well, this formation does look like a top here. New Zealand dollar also failed to close above the 50% Fibonacci level, and it was limited by moving averages on the weekly chart. So if the currency returns below 0.6850, the focus will be on 0.68 and 0.67 marks. Resistance at the same place and 0.6905 and 0.7025. Gold managed to leap up last week because of the weaker US dollar and the expectations of a pause in the Federal Reserve's interest rate hiking cycle. Gold managed to close above October high at 12.27. And it is quite possible that the precious metal will manage to reach the next Fibonacci level at 12.62 mark. Let's also have a look at the chart of Brent. Oil market experienced a great volatility last week. It closed the gap, but still stayed below resistance. The key oil exporters, the OPEC and other key suppliers, agreed to cut supply from January by 1.2 million barrels per day. And this is a fact that may support the oil prices above the Fibonacci level here. However, still there is a lot of supply from America, and there is a decline in global demand. There is also the problem of a global economic growth slowdown. So it seems that resistance at 63.45 will be a big obstacle, and as long as we trade below this level, we won't risk the bullish positions on oil, and the negative pressure will remain for oil to test the lower levels, the recent lows. The moving averages are in the negative setup on the daily chart, and only a significant break of 63.45 will allow for a recovery towards the 70 level here. Finally, US dollar Canadian dollar reached highs around 1.3450, but then was rejected down as the US dollar weakened. Here we can see that support is located at 1.33, the key level, and the decline below this level will make the pair test 1.3225 mark, although we do not expect the pair to fall lower because Canadian dollar still is affected by rather low oil prices. And on the upside, the pair has also reached significant resistance levels. So here more or less sideways trading between 1.3380 and 1.3225 is expected. This is all for today. Thank you for your attention, and visit likeforex.com for more information about Forex trading.